the market's changed, Dave. This is a living, breathing thing, the market, and a lot of things could happen at any time. And I would say in such a risky environment, the chances of something happening are even that much greater. There's lots of stuff going on right now. The ongoing war in Ukraine, high inflation. You have the Federal Reserve that's moving interest rates around and trying to clean up their balance sheet. It's just a big hornet's nest of stuff. And they're saying that all of these things can combine to significantly increase the chances of a recession.
This is the Gold Standard from Midas Gold Group with Kenneth Russo. Hello, I'm Dave Deno. Welcome to the Gold Standard, your source for secure investment opinion and information on the advantages of purchasing and owning precious metals. Whether you're a novice investor or an experienced collector, this is the program that gives you a realistic weekly perspective on the state of the economy, reliable information about using precious metals such as gold, silver, and platinum to safeguard your wealth, and remarkable details about specific precious metal coins and bullion. Ken Russo is a senior vice president at Midas Gold Group. His peers characterize him as a straight shooter who will work harder for you than anyone else. Ken, it is a pleasure to join you again this week.
Nice to be with you as always, Dave.
Let's get into it because today we return to the topic of signs of a recession by the end of the year. Let's begin by defining a couple of terms that we're hearing in the news more and more. Inflation and now recession. How are they defined and how do they relate to each other?
Yeah, well, obviously very relevant, Dave, to today's market. Just turn on the television or listen to the radio, and you're going to hear a lot of these words repeated many times. But inflation is a general increase, Dave, in prices and a fall in the purchasing power value of our money. And that's what we've been seeing for, at least more than a year here in the main news. But I would argue that we've had growing inflation for more than 10 years. But the definition of recession, Dave, is a period of temporary economic decline during which trade and industrial activity are reduced, generally identified by a fall in GDP, gross domestic product, in two successive quarters. So, Dave, one could lead to another. A general increase in prices with a fall in the purchasing value of our money can lead to a period of temporary economic decline during which trade and industrial activity are reduced, and that's caused by the devaluation of our currency. So our money, Dave, does not buy as much as it used to. People can't buy as much in the future. It's very bottom line economics. We're looking for ways to protect ourselves from that. And that's why we talk about wealth preservation with precious metals. Now we're seeing, Dave, many economic indicators that are warning of a fast approaching full-blown recession.
Wow. Ken, I came across a headline that stated this, and I quote, "Recession shock is coming, Bank of America warns," end quote. What did they have to say?
Well, it's one opinion, but they do have a lot of resources, and they do put millions of dollars into research, and they have many, many, many hundreds of millions of dollars, I'm sure, under management that people rely on their opinion. It's a warning that should definitely get our attention, and they're warning that high inflation poses a credible threat to the economic recovery that began just 2 years ago. Well, I mean, Dave, was there an economic recovery 2 years ago, or was it just, money that was just given out? The Federal Reserve Bank just printed trillions and trillions of dollars out of thin air, and the central banks of the world all followed suit. And so, I mean, what economic recovery? I mean, This has been fake money for a long time, and it's just a matter of time. You just can't kick the can down the road forever, but we'll get to that a little bit more. But the warning came ahead of a recent government report that showed consumer prices surged by 8.5% in March, the fastest pace since December 1981. Wholesale inflation surged to 11.4%. There were record year-over-year price spikes on everything from new vehicles, men's apparel, baby food, salad dressing. I guess everything is just going up, which it is, which we've been talking about for a long time. The
Mm-hmm.
price of meat, fish, poultry, eggs has risen by over 14%. I know when I go to the grocery store, it costs me 20 or 30% more than it did, roughly a year ago.
Mm.
Used cars and trucks rose by 35%.
Wow.
Gas for your vehicle rose 45%.
Mm.
I read the digital currency report from the Federal Reserve Bank that came out in January, and it's pretty scary. And this is what's important. The Federal Reserve Bank, if they have their way, and this is from the horse's mouth, they will control all of our personal bank accounts and our retirement accounts. We will have all of our accounts at the Federal Reserve Bank. Those accounts will be obviously wrapped up in digital currency. Obviously, you can follow the back and forth, the payments in, payments out very quickly. All of this will be controlled by an app on our telephone. And I hope people out there understand that our telephone is a surveillance device. So wouldn't this be a lot easier, this plan to implement, if the banking system, the financial system, the economy, and the stock market was crashing? Almost as if we feel we need them, we need them, we need them to help us. Well, that's their plan. Obviously, they're always behind the curve. They haven't done anything right for 30 years. It's always been too much or too little. I doubt this is going to be anything different. I doubt that they're going to be able to offer us a soft landing for what's going on. And you can see the volatility in the stock market, the volatility in the bond market is really picking up. And I would not be surprised if this is just starting and it gets really ugly from this point in a lot of these markets.
A reminder here, you are listening to the Gold Standard with Ken Russo from Midas Gold Group, and today our topic is signs of a recession. We're revisiting this topic. Ken, coming from the nation's second largest bank, the Bank of America, what we've been reading is a very serious warning. Now, in past programs, we have talked about the wisdom of moving funds into physical gold, buying gold to act as a hedge against inflation, to preserve your savings worth. What about gold as it relates to recession?
Well, that's a good question, Dave. And obviously, everything we're talking about today is the upcoming recession, the upcoming financial crisis, the upcoming dollar devaluation, the upcoming non-leadership of our leaders at this point. How do we protect ourselves and our nest egg and our legacy from losing tremendous amounts of value during that time? And I mean, it's inevitable. It's not a question if any of this stuff is going to happen. It's just a question of when this stuff is going to happen. So what I want people to realize is it's not so much are we right about this is how it's going to happen, this is when it's going to happen. It will eventually happen. And the question and the topic of this show every week is how do you protect a significant portion of what you've worked so hard for, whether it be in a retirement account or savings or just extra money you have somewhere, for a rainy day. How do you protect the purchasing power and the value of those accounts without being financially destroyed during this next financial crisis?
So many of those who are listening right now, they have never bought gold or other precious metals, and they may feel like their lack of knowledge could open them up to poor choices or even fraud. What do you do at Midas Gold Group to assure and to guide them through the process?
Well, I mean, that's what our specialization is, Dave. We don't tend to, be experts at a auto mechanic, but for when it comes to gold and silver, that's what we do. So everybody was a beginner at whatever they do at one time. It's hard to feel confident in everything that you go through without having a relationship. So I would say, besides being trustworthy and transparent and reliable and fair, which is what we're told by our clients over and over and over again, it's about communication, it's about a relationship, and it's about a long track record. Not only a long track record of Midas Gold Group, but a long track record of gold as money, something that you can trust, something that is reliable, something that is a store of value and a medium of exchange. So that's what's most important at this point, is to develop a relationship, develop trustworthiness with a good gold and silver dealer. Midas Gold Group has been doing this for over a decade, and we're veteran owned. We're very proud, and we've worked very hard to build up our name. We don't take that lightly, but like I said, we wouldn't be where we are today without great clients. But the point is, I don't think people are going to be able to survive this next financial crisis in one piece without diversification. And diversification at this point in wealth preservation products like gold, silver, and platinum is imperative. Remember, Dave, we've just gone through so many years of money printing. And when you have exponential money printing, that means exponential risk. So, in such a risky environment, the mother of all bubbles, which you and I have talked about for many, many, many times, and eventually it's going to implode. How do you protect your purchasing power and your nest egg when that big bubble explodes? So, clients, in return, that get great reliability and they get great service and they get someone that they could lean on. And remember, we're talking about large transactions here frequently.
Mm-hmm.
I mean, that kind of relationship, besides price, there's many things that are important, but all of those things that make up a transaction and are important in anything you do these days, whether it be a doctor or a lawyer or a plumber or a real estate agent or an auto mechanic. All of these things are important. All of these things make a relationship, and we build our clientele based on relationships.
And I will say from personal experience, it is very reassuring to have a portion of wealth in gold and silver. I feel protected against the free falls of the economy. And a reminder here that you are listening to The Gold Standard with Ken Russo from Midas Gold Group. Today, we're talking again about signs of a recession and where you can find safe harbor to preserve your money and not lose it. And I've got more questions coming up, but first, in a few moments, we're going to take a look at a specific gold product that you can add to secure your wealth, and that's coming up right after this.
The Fed lied when they initially said inflation was transitory. They knew it wasn't, but didn't want to panic the markets and you, the people. This is why they tried to keep secret the $125 trillion in loans they gave banks around the world. We've seen inflation ramping up, and Midas Gold Group thinks the Fed is way behind the curve with interest rates. Venezuela is the case study when political policies go awry and chaos ensues. It's time to call Midas Gold Group, 805-601-6000. You can add financial privacy and protection from inflation and profit potential to your investments through physical gold and silver. They provide you with the quality service and critical information you need without the pushy salesman. Get your portfolio reset with gold and silver. Call Midas Gold Group for their guide to owning bullion and coins today. 855-322-GOLD. That's 855-322-4653 or MidasGoldGroup.com.
And we're back with more of The Gold Standard, brought to you by Midas Gold Group with Ken Russo. I'm Dave Deno, and today our topic is signs of a recession. We're revisiting this topic. By the way, if you live in the Los Angeles or Phoenix area, we encourage you to come and visit our local office to meet with us in person. For the address and directions, just log on to our website, MidasGoldGroup.com. MIDAS, MidasGoldGroup.com. For those of you listening in other cities, call us directly at 855-322-GOLD, 855-322-GOLD. By the numbers 855-322-4653. Ken, we now turn to look at a specific gold product, and today we turn our attention to a favorite coin of gold collectors, the gold Canadian maple leaf. And you provide a lot of these to gold buyers, don't you?
Yeah, a real popular coin, Dave. The gold Canadian maple leaf is a 24 karat gold coin. Many clients like it because of its value and its stunning appearance. It's a coin that, even though it's a higher quality gold purity than the gold eagle, is usually a little bit less in cost than the gold eagle. So it's something that clients look for. It comes from the prestigious Royal Canadian Mint. and it boasts the title, Dave, I would say, of one of the most popular bullion coins in the world, for sure.
As you hold one, can you describe it to us?
Yeah, sure. The standard version of the gold Canadian maple leaf weighs just over 1 troy ounce. It's changed a lot over the last 20 years. It's become much more sleek and modern looking, although they've always been nice, even the ones that are, from the 80s and the 90s, just a little bit of a higher standard these days with a lot of counterfeiting technology and really nice lines. It's 24 karat gold. Like I said, it's 4 nines pure. The head side, which is also called the obverse, depicts Queen Elizabeth II, and the reverse features the iconic Canadian maple leaf, which is the national symbol of Canada. And one final detail, Dave, about the gold maple leaf is they also come in smaller denominations. They come in a ½ ounce, quarter ounce, 10th ounce, 1/20th, and 1/25th of an ounce size. So,
Wow.
you can choose smaller sizes to spread your gold investments out, or just some products that are just a little bit more affordable than, say, the 1 ounce or the ½ ounce coin.
Good description. Thank you, Ken. Coming up in a moment, we're going to continue talking about signs of a recession with Ken Russo from Midas Gold Group, and that's coming up right after this.
Venezuela's inflation was off the charts. People could not afford food, medicine. Socialism collapsed, and so did the economy. The Federal Reserve's modern monetary theory and political policies have America on the same path. Debt is historic, with $125 trillion lent to banks with no way to pay it back. The need for financial diversification in the form of gold and silver is becoming stronger than ever. Federal and state governments are expanding their level of oversight into all aspects of our lives, including our finances. This is not a drill. It's time to call Midas Gold Group. 855-322-GOLD. That's 855-322-4653 or MidasGoldGroup.com.
And we're back with more of the Gold Standard, brought to you by Midas Gold Group with Ken Russo. I'm Dave Deno. Our topic today is, again, signs of a recession. And a reminder, if you live in the Los Angeles or Phoenix area, you can actually visit our local office to meet with us in person. For the address and directions, just log on to our website, MidasGoldGroup.com. MIDAS, MidasGoldGroup.com. And for those listening in other cities, you can call us directly at 855-322-GOLD. 855-322-GOLD. And you're not going to get a hold of some salesman in a boiler room. You're going to get a hold of one of our principals. By the numbers, you can call us at 855-322-4653. Now, back to our topic, signs of a recession. Ken, another headline I spotted this week said J.P. Morgan's CEO warns of powerful forces threatening U.S. economy into a recession. What do you make of that?
Well, maybe. It's another opinion. I happen to believe that we're headed in that direction. Almost 1 year to the day, J.P. Morgan issued a bubbly confident forecast, Dave, for the global economy going into 2022 and 2023. So the Goldilocks moment is now beginning to more and more just look like a fairy tale, wishful thinking. We'll see. The market's changed, Dave. This is a living, breathing thing, the market, and a lot of things could happen at any time. And I would say in such a risky environment, the chances of something happening are even that much greater. There's lots of stuff going on right now. The ongoing war in Ukraine, high inflation. You have the Federal Reserve that's moving interest rates around and trying to clean up their balance sheet. It's just a big hornet's nest of stuff. And they're saying that all of these things can combine to significantly increase the chances of a recession. Well, yeah, also could really increase the chances of a meltdown. I wish they said that, or a stock market collapse, or maybe someone can be transparent and truthful. But they've said that these are very powerful forces, and those things are going to collide at one point. No one knows how this is going to turn out. All I know is that when you have such a risky environment that's been predicated on money printing, we can print as much as we want. Well, someday that's going to matter, and someday, what do they say? The chickens are going to come home to roost, and people out there that have been taking abnormally high amounts of speculative positions and a lot of risk, and all of their wealth is wrapped up in paper, I think are going to learn a very, very, very expensive lesson. On the other hand, Dave, for those that are diversified, and for those that take some of that paper out of the bank or out of the markets or out of their retirement accounts and convert some of it into physical gold, are going to give themselves a chance not only to protect themselves from being financially ruined during the next financial crisis, but there is a pretty good chance that the price of gold will increase substantially over the next 5 or 10 years. So there's also an opportunity to benefit and to see a pretty big return from gold as well.
A reminder here that you are listening to The Gold Standard with Ken Russo from Midas Gold Group. And today, our topic again is signs of a recession. Ken, I want to come back to what we can do as we close out today's time together. You have been through your share of market bubbles and market crashes. How has gold fared in times when a faltering economy was wiping out people's savings?
Well, it's given them options to be able to move on. It's been able to protect generations of savings at some in some instances. It's given people something to fall back on. It's giving them the ability to hold on to some of their purchasing power. It's given them a chance to make up for a lot of losses and that the other markets have given them. Think about it. In this scenario, stocks are going to take a huge hit. Real estate will take a huge hit, and bonds are going to take a huge hit, not to mention the devaluation of our dollar and all the other fiat currencies that are out there. So how do you make up for some of those losses? And typically, historically, gold has been able to satisfy that request, and it's done a great job.
One final question. For people who are currently invested in an IRA, or maybe an old 401k plan at a previous employer, can they transfer those funds into gold, and can they do so without incurring withdrawal taxes?
Yeah, well, it's just a movement of assets sideways, from one asset to another. So that's not a taxable event. If you have an old retirement account from a previous employer or you have an existing IRA, you could open up a gold IRA with Midas Gold Group. We will educate you on the precious metals that are able to be put into that gold IRA, the ones that you will own, and that would be a great way to diversify market holdings. So yes, a retirement account could be sent sideways, transferred into a gold IRA tax-free. Eventually you have to pay taxes because, it's an IRA, not a gold IRA rule, but just a regular IRA rule. But if you want to get some risk out of the market and to take some of those paper assets and move it into a physical, tangible precious metal, that would be one tax-free non-event that customers and investors out there should be considering at this point, Dave.
And it's that kind of expertise and that kind of advice that really accounts for why I own gold from Midas Gold Group. Ken, thank you so much.
My pleasure, Dave.
That's going to bring us to the end of our time together today here on The Gold Standard with Ken Russo, brought to you by Midas Gold Group. And a reminder, opinions given here are not intended to be specific to your investment strategy, but rather general information to give you a better understanding of investing in precious metals. For answers to your questions, call Midas Gold Group at 855-322-GOLD, 855-322-GOLD, by the numbers 855-322-4653. And the website is MidasGoldGroup.com, M-I-D-A-S, MidasGoldGroup.com. The Midas Gold Group is proud to be America's #1 veteran-owned gold dealer, supporting veterans' causes with a portion of profits donated to the Wounded Warriors Project and the Semper Fi Fund. So your investment in your future is also an investment in the future of those who have bravely served the cause of freedom. Again, the number to call to speak directly with Midas Gold Group is 855-322-GOLD, 855-322-GOLD. Ken, thank you again for your time today.
Yeah, well, thank you for your time, Dave, and thank you to the audience for listening.
I'm Dave Deno. Come and join us again next week at the same time for another edition of The Gold Standard.
The Gold Standard was brought to you by the Midas Gold Group.